So what else can the government control that'll affect your retirement? Josh Miller here with Miller Retirement Group. In our last video, one of the topics was taxes. Today, I'll go over 3 more areas of your retirement the government can mess with. Tell us which area of governmental control tweaks your melon the most by putting your comments below. Let's take some action and jump into today's video. Is it beneficial for you when the government changes things? Most of the time, not so much. One of the areas that they can change when it comes to retirement planning has to do with the interest rates and the bond portion of your portfolio. Now, with the usual balanced portfolio that we find most people have, it has pretty much just stocks and bonds and a tiny bit in cash. Now, the stocks are there for some growth, and the bonds are supposed to be there for a little bit more stability, not so volatile, and a lot of the times, the income portion. And if the income portion of your portfolio is coming from bonds, then you're at the government's or the Fed's mercy once again. And here's why. Interest rates and bond prices are kind of like a seesaw. If interest rates rise, the price of your bond goes down. And right now, we'd probably all agree that we're about as low as we can go for interest rates. So when the interest rates go back up, the value of your bonds will go down. And if you're working with an advisor that just increases the bonds or bond-like investments in your portfolio as you get closer to retirement, that could put you in a heap of trouble. Because bonds really aren't doing very good right now for producing income. Dr. Wade Pfau, who works for the American College of Financial Services, which they create all the training that we have to go through to get all of our designations, the little letters behind our name. And when compared to other income-producing products, he found that bonds are one of the worst products right now to use for income in retirement. They used to be really good, but believe it or not, things kind of changed. So cashing out on bonds now might be the thing to do and use a bond alternative. And there are several good bond alternatives that are available, but definitely talk to somebody before you do anything. Now, this second piece of governmental control is broader, but it's also farther reaching. The government can create or change laws that have an impact on just about every aspect of your retirement. Now, just for a quick example, I'll go through some of the bigger changes for retirement issues in the Secure Act and the CARES Act. Now, the first big change in the Secure Act was for non-spousal inherited IRAs. Spousal inherited IRAs didn't really change. So if you left an IRA to your kids, the ability to spread out the distributions from that account has been revoked. Elvis has left the building. The balance upon inheritance must now be liquidated within 10 years. And there's still fine print on those IRAs that still can stretch. Like minors have 10 years after they turn 18 to liquidate, and disabled individuals, they can still stretch it out. So it's situations like that. Now, non-retirement accounts, they can still be stretched because they're taxed completely differently. So what does the 10-year rule really do for you guys or your kids? Well, when do you usually get an inheritance? Just about the time when your income's the highest it's ever been. So having to take it all out within 10 years might bump you up into a higher tax bracket. Now, what it does for the IRS is it's estimated to create over $15 billion of more taxes over just the next decade. Man, the IRS is one finger dipping fanatic. Another change is if you named a trust to be the beneficiary of your assets, the Secure Act might change the results of what you originally intended for that trust. And it depends on what type of trust it is. Different types of trusts affect what changes are relevant. So you really want to talk with an estate attorney to get clarification. The Act also moved the required minimum distribution age from 70.5 to 72, so I'm kind of glad they did away with the half age. And the last change I'll go through today is that you can still contribute to a traditional IRA after you hit 72, as long as you have earned income. Before the Secure Act, it was only a Roth that you could do that, and now it's both. So those are a few of the bigger changes that affect the majority of people. The CARES Act is a lot more detailed, and I'm going to go fast with some of these. So if you have required minimum distributions or RMDs on your IRAs, which means you're at least 72, you don't have to take them in 2020. And if you've already taken them, you can put them back at least until August 31st. And if you're under 59 and a half, you can get a coronavirus-related distribution, or CRD, of up to $100,000 from an IRA and not have to pay the 10% early withdrawal penalty. And you have 3 years to stretch the tax liability of the CRD. You also have 3 years to recontribute those funds back to the IRA. But definitely talk with a tax professional if you're thinking of doing any of this. Now, those that qualify for the CRD include situations like if you or your spouse got furloughed, or you got COVID and couldn't work, or your pay or hours were reduced, and there's several other factors as well. And this is a really touchy detail because everybody has been affected somehow, but it's meant for those that have experienced financial hardship. And if you want more details, there's a link in the description to some FAQs on the CARES Act. The third area that the government can fiddle fart around with is Social Security. Now, everybody's heard that the Social Security Trust Fund is running out and Congress needs to do something to fix it. But who would they most likely change it for? Well, who is a politician's #1 voting bloc? People over 55. So put yourself in the shoes of a congressman. I know that's right where you want to be, especially right now. And you have the choice of making changes that would affect the younger people who don't vote as much, aren't taking Social Security, and don't even believe they're going to get it anyway, or make changes to your #1 voting bloc. What would you do? Put your answer in the comments. If they reduce benefits to the majority of people voting for them, what would happen to them? They'd get their butt kicked out of office. And you can count on one thing. They're going to do whatever it takes to get reelected. So that's kind of why I find it hard to believe that they're going to change Social Security benefits for the ones who are already getting it or are soon to get it. They also control the cost of living adjustment for Social Security, which is tied to the Consumer Price Index, or CPI. This is inflation. And depending on the amount of inflation on certain goods and services, that determines how much of an increase your Social Security checks will have the next year. And I say certain goods and services because the indicators they use for inflation focus on the goods and services for the workforce, which is CPI-W, instead of the main goods and services for retirees, which is CPI-E for elderly. Different areas like housing and healthcare costs go up more for retirees than the workforce. And there have been arguments for years that the Social Security cost of living adjustment needs to track the CPI-E. But whether they use one set of indicators or the other, the percentage of increase still isn't matching the overall inflation for either demographic. So the buying power of your Social Security check is going to go down every year. And since 2000, the buying power of Social Security has gone down 30%, according to the Senior Citizen League's latest research. And that can play a major role when looking at income for your retirement. If you don't have a current retirement income plan, I highly recommend that be your first move. That's something we do for all of our clients. It's part of our trademarked resuscitation report. Another part of our resuscitation report focuses on the big question of when is the best time to claim? Is it 62, your full retirement age, or 70? Or maybe it's just whenever you decide to retire. Deciding when to claim can mean a difference of hundreds of thousands of dollars over your retirement, so it can be a really big decision. And this decision has to be approached with all of the information about your retirement. Because for some, it makes more sense to claim early, yet for others, it's better for them to wait. It's based on your situation and goals. And here's a few questions to help you understand where I'm coming from. Are you going to be drawing income from your assets if you claim later? Or do you have a pension that'll cover your expenses? If you will be drawing from your assets, will the amount be a small enough percentage to be sustainable even if there's another big market downturn? How would claiming now versus later affect your taxes throughout your retirement? Do you have longevity in your family? How will it affect your spouse when you pass? Now, those are just a few factors we consider when we look at when would be best for you. Everybody's situation is different because if all you really want to know is how to get the most out of Social Security, it's really kind of easy. Make a lot of money when you're working, wait till 70 to claim, and then live past 100. Now, if you didn't make all the money in the world and you can't guarantee that you're going to live a long time, you should probably have somebody that focuses on retirement planning look at your situation. Just click the link to set up a call. So now I want to hear from you. When the time comes for you to make important decisions, are you the kind of person who tends to sit back and let things happen to you and kind of let things just work themselves out? Or are you the kind of person that makes a plan and takes action? See, your actions are going to determine what kind of retirement you'll have. Luck, the government, not even a pandemic will determine your retirement. The decisions you make right now will determine what it'll look like. And if you're the kind of person that takes action on your important decisions and would like help answering any or all of the questions for your retirement, go ahead and click the link below for a simple 15-minute complimentary phone consultation to find out if we can help. Tell us in the comments what your biggest concern for retirement is, and if you like learning on the go, head on over to our podcast and YouTube channel, Retirement Rescue Radio. You can use it as another tool to help you navigate your retirement. Look for a new video coming out every Friday. Again, make sure to subscribe to our channel and hit that notifications bell so you don't miss any answers to your retirement questions. Live the retirement you deserve.